how do you see the role of AI and analytics changing the credit world? How digital lending has changed the borrowing experience for the consumers, especially the younger generation who are tech savvy? There are certain myths and misconceptions about credit industry as well.
If you're going to check your CIBIL score regularly, it will not impact your CIBIL score. My grandfather would think credit is a bad word. The younger generation, they would say credit is a form of life.
Welcome back to TVS Credit Fireside. I am Archana and we are excited to have you join us with us today for second part of our discussion, that is maintaining and building good credit. If you missed our last episode, we had a great conversation with Bhavesh about basics of credit and how to build and maintain good credit profile and how young people can improve their financial health. Today, we will continue our discussion with Bhavesh Jain about advanced credit strategies, AI, and how digital lending has changed the experiences overall. So Bhavesh, in the last episode, you mentioned about Shah Rukh Khan and Virat Kohli. So I just want to know, why do you like them specifically?
So I don't like them.
Yeah.
I love them. I adore them. And I draw inspiration from both these gentlemen on a daily basis. I don't just love Shah Rukh Khan on screen, but off screen. I think he's one of the most intelligent and witty Indian and celebrity. And third and most important thing is that as a business head, I love his business acumen. All the business decisions he took, right from starting a production company to buying an IPL franchise. And we know recently the IPL was won by KKR. Yeah. So he is bringing his winning streak from Bollywood to cricket, the two things which the nation loves. Yeah. And what I love about Virat Kohli is his aggression and the consistency of his performance, because if he's on the field, the energy levels on the ground and as a viewer sitting at home is to another level. And the way he is sort of committed to his craft, he's equally committed to his wife and his daughter. So that balance between his professional and personal life is what inspires me, and that's why I love these two icons.
No, that's nice. That's very nice. So Bhavesh, last time we touched upon various strategies to build and maintain good credit score. So this time we'll talk more about the technological advancement that are there in the credit industry. For example, AI is revolutionizing everything. AI is everywhere and digital lending platforms have also increased. So we'll touch upon these topics more.
Yes, absolutely. We should talk about technology, Archana, because technology has enabled access to credit for every Indian in the fastest way possible and the cheapest way possible.
Because of technology, processes have become much easier and much more efficient. So how do you see the role of AI and analytics changing the credit world? And have you seen any business use cases where AI is being used in the credit world and it has impressed you a lot?
It has not just impressed, but it has inspired us because we do scoring and analytics for a living in TransUnion CIBIL. So AI/ML models have actually helped institutions go into hyper-personalization at the prospecting stage. Second, on the underwriting stage, it's very important aspect because today the number of data points which fight to get a prominence in a credit model or a scoring model, those sort of nuanced modeling approach help us, a credit manager, decide which are the significant variables. One. Second thing is that it helps you create a nice segmentation because you want to pick up the best among the good customers and the good among the relatively bad customers. So what AI/ML has done is that along with the traditional modeling or the scoring methodology, it has helped fine-tune the underwriting models, segment it far better because India is such a huge and a diverse market and you cannot sort of put a common approach for the huge 1.5 billion population in this country. You need to sort of segment it as much as you can because you want to have a fine balance to make sure that you serve the consumer, but you manage the risk of your institution at the same stage, because that balancing act is very important. And that's where AI ML models have played a very important role to create a state through processing for the institution, but at the same time create a lot of convenience for the consumer.
That's very insightful to know. Just now you just mentioned about you are sitting on sofa and you can avail loans. So I just want to understand on that part as well, how digital lending has changed the borrowing experience for the consumers, especially the younger generation who are tech savvy.
So I'll again go back to stories of my childhood. During my childhood, if I had to sort of think of a new television in my home, I would go and tell my father that let's go and buy this television set based on what television ad I would have seen on my black and white TV. My father would say, why don't you go to 5 stores, get the codes, get the feature, and then on an auspicious day like a Gudi Padwa or a Dhanteras, we'll all go and buy that television set. That's not an approach which a Gen Z or my daughters or my niece would like to take. They would actually go on an app, look at all the televisions. They would compare it both on price point, cashbacks, and all the benefits they would get at a consumer. This is going to save a lot of time for the consumer. Compare it, decide, and what has this enabled? Suddenly, which was an involved purchase during my time, has actually become an impulse purchase. So look at from the lens of an institution and then look at from the lens of a consumer. From an institution perspective, suddenly a high involvement purchase had got transformed into an impulse purchase, which means that impulse purchase can lead to a lot of higher sales and revenue for an institution. And at the same time, when it's an impulse purchase, that means accessibility is very high for the consumer. Along with accessibility, there is availability of credit, which means that what you need now, you get it, and you get it on credit. So it helps you even on your cash flow. So digital lending is actually sort of eased the life of a consumer, have grown the business of institutions, but at the same time actually spoiled the consumer because there's so much of choice available at the ease of their home, at the click of a button. The consumer is the king right now. The consumer can decide the destiny of the institution.
There are certain myths and misconceptions about credit industry as well. So is there any prevalent misconception that you can think of, and how do consumer can demystify those misconceptions?
Achana, there are many of them, and I'll link it to different generations. So my grandfather would think credit is a bad word. I don't think credit is a bad word. If you ask my niece and nephew or the younger generation, they would say credit is a form of life or way of life. So that's the biggest myth which existed in the previous generation, that credit may not be good. But we have seen that the credit growth has actually propelled the GDP growth of this country in a big way. That the GDP growth and credit growth are actually interlinked. And the massive growth and India becoming the 5th largest economy, credit growth have played a very pivotal role there. So from a nation perspective, the previous myth of the generations earlier was that credit is not the right thing, has been sort of demystified, and credit is here to stay. First myth. Second myth, which a lot of people have with regard to CIBIL score, because credit is equal to CIBIL and CIBIL is equal to CIBIL score. The biggest myth is that if I go onto CIBIL.com, pull my own report, it will bring down my score. I would say no, it will not bring down your score. That's a misconception on the street. Where does CIBIL score get into consideration is when you apply to multiple institutions in shorter duration. That's where it sort of gets correlated to the CIBIL score. But it's important to monitor your CIBIL score on a regular basis. And hence, we actually encourage all the consumers who come on CIBIL.com that go into a subscription approach, so that you can monitor your CIBIL score, and that has no impact or bearing on your CIBIL score. Third is that how am I going to monitor my credit obligations, or how am I going to sort of manage my credit obligation? So there are multiple tips one can look at giving it to youngsters to make sure that they are able to fulfill their credit obligations.
Actually, those are some excellent tips, Bhavesh. And I also heard a lot of people getting worried about checking their credit score. And as you rightly mentioned, that there is no harm in checking your credit score.
Very, very similar to Archana in terms of if you are getting your body health checkup done,
Yeah.
does it impact your body? No.
No. Yeah.
Same way, if you're going to check your CIBIL score regularly, it will not impact your CIBIL score.
So, basis your extensive years of experience in credit world, so is there any particular trend that you saw in your career?
One biggest trend which has changed things in the country, I would say digital lending. The intervention of technology and credit, or let me use a better word, the marriage between finance and technology. So the CTOs and the CFOs coming together has actually revolutionized the credit market in this country. That's the biggest revolution, I would say, which has happened, because earlier the thought process of bank or lending was that you will go into a physical branch, you will wait for hours, you will give an application form. If your father or mother or uncle knows the branch manager, there's a high likelihood for you to get loan processed in the earliest possible time. So one, that fear of saying that how will my family or my neighbors think about me taking a home or a car on credit. Second was that I may not have the time and the patience to go 5 times to a bank branch.
Yeah.
Third is that nobody in my family knows a branch manager. So all those sort of hassles or constraints in the mind of the consumer, nobody got excited to avail credit. So what digital lending has done? It has made sure that you get choices at the click of the button, at the comfort of your home. Why I'm saying it's important? Because earlier, an institution may not find an economic viability to put up a branch in a rural location, and hence that rural consumer was deprived of access to formal credit, which is the right of every citizen of this country. So it has broken all the geographic divides, it has broken all social divides, it has broken all the demographic divides, it has broken a lot of barriers and myths. So digitization and digital lending is the biggest trend which have actually revolutionized credit in this country, and credit growth have actually enabled GDP growth or economic growth for this country, which all of us as Indians should be really proud about. We are the 5th largest economy, soon we will be the 3rd largest economy, and as part of the Viksit Bharat program, we will, fingers crossed, by 2047 be the largest economy in the world.
Actually, I also agree on that part. Like, a lot of convenience is there and processes have become much more faster and speed is also there. Thank you, Bhavesh, for such insightful discussion. And to all our listeners, we hope you enjoyed this episode as much as we did. So don't forget to follow our social media channel and stay tuned for more such engaging conversations with industry experts. This is Ashna signing off from TVS Credit Fireside. Take care and stay financially savvy.